All right, what's going on, guys? I hope you're having a wonderful weekend. We're going to talk real estate, and I know it seems like we've been focusing a lot on the markets, and why this is both surprising and we need to talk about it is the government shutdown has been affecting it. So I have some real estate data here. You'll see the last time it was we have any references was October, November, and I'm going to go over. People have been extrapolating some new data, but essentially the government shutdown has been stopping new real estate data from coming out, and now you could get with a lot of people have conspiracies saying that certain data is coming out to they're doing the government shutdown is trying to prevent certain data, but there's some interesting stuff I want to look at. There is certain metrics like mortgage applications are still being, you could still get data on that. That's actually coming out, but I'm going to go over that. There's also the housing index. Going to go over what data has been extrapolated, but essentially there's this article, and this is what sparked this because I was kind of confused when I saw it, but they're saying that new home sales tanked 19% to end 2018, but granted, the government hasn't released it. Where did this come from? There was an independent report or study, and then we're going to go over some home builders stocks. And because there's stuff going on with the home builder stocks, I think you could look and see how when real estate started slowing down, and even just there's many things to just gauge the sentiment of the real estate market. But essentially, we are hitting a level with real estate where it is getting very interesting, I think, for both realtors, brokers, and investors. It's having an influx with even the foreign money, China overseas, and even people in Canada. It's a very interesting situation right now. So seeing how we closed 2018, how we're going into 2019, and even this government shutdown, I want to say I can't wait to see the data we get. But things are getting pretty interesting. And now also we've talked about, I've been telling you guys with the markets, watch out for stuff going on the currencies, right? The global currencies, everything with oil, even the pound and all that stuff. Well, the rates and mortgage rates, even the yield curve, this ties into real estate. So you guys can see why this is important. And if you guys are even new to the channel too, you do not know what I do. I invest. I have a stock portfolio. I have a real estate portfolio. So we give stock market news. Come to the stream 6 a.m. We're trading stocks, but I haven't really done too much on the real estate. That's why I want to go over this with you guys, put this info out there, but also for you guys to go and get ideas of where to be looking. I don't think we should sleep on it too much, but as you could kind of see when the stock market moves a little faster, a lot faster than real estate, and investors are more prone to react first to there, but then real estate has an effect. However, now what I'm trying to say on the bigger scope of things is liquidity and money. You could kind of see if it's kind of a bigger indicator when you see money moving in and out of real estate. But the predictions now, what happened so big is it was pretty much a collapse. So let's go over the data. I want to show you what they said and kind of now comparing it to even the video I made a few months ago, going over the California Association of Realtors, their expectations for the housing market coming into 2019. So where we are right now and what is expected, this data kind of throws that info off. That's why it's worrisome right now, because at first we were expecting numbers to come down. People were expecting real estate to slow down, but not necessarily drop or collapse or have growth decline as much as it would be, below 2014 levels. But now that's something we got to talk about. So here's the article, and what it was is that they're even saying, the government shutdown hasn't stopped the flow of bad housing data, but this company, John Burns Real Estate Consulting, it's this California firm. They studied 373 market ratings. They looked at local builders. They looked at these to make pretty much an estimate of what's going on. So they got to this assessment, and they're saying they're assuming a 19% drop in new home sales. So one, these are brand new builds. That's something to differentiate. If you're not, and I have a video on that. You could just search new home sales, the trading fraternity on YouTube. It'll come up. But there's a different, we're going to see I think pending home sales and existing home sales are very important, but the new home sales, that's going to affect the builders. That's where we see that effect. But that is, why I'm going to bring up the new home builder stock. But essentially is saying that it's going to come down 19%, and you could see it. Here's the NAHB housing market index. So why did this data come out here in December? Well, it makes sense because this isn't based upon, this isn't a government index. This is a National Association of the National Association Housing Board, something like that. But and again, National Association of Home Builders, excuse me. See, you guys could always look it up anyways, but that's dropping. They came up with their own index, and well, it dropped a pretty good portion. I don't know if that's, I think about 10% almost from October. And then the next thing that they're pretty much comparing, and with this number, it's saying new home sales dropped 19%. So it's saying compared to last year, so December 17. And that's something to notice too, is that December and like these last months in real estate have been, they're seasonally really slow. People don't like to sell or purchase houses around this time. So what they're saying, for that to drop 19%, that means it was a slow season and just demand really just fell off. But looking at what the housing index, it was a big drop from a few months ago, comparing it to where it's about 2017. That's your December. Wow, and see in December they built a lot of homes. It was high. It's down almost about 30 or 50%. Really, it's a huge amount. But the key is, this is with all the data, and this is now what is so important. What we're watching in real estate is for numbers to start slipping below 2014, because everybody's estimates. It's just like the stock market. If the S&P 500 drops below, the 2015 levels, or even right now 2017 lows, and gets to those 2017 lows, 2016 lows, that's worrisome. For real estate, it's like if it drops below 2014, that's bad. But as you see, the home builders index is at where it was at 2016, 2015, and the market was doing great there. We just saw a real big push end of 2016 into even 2018. So that is the unofficial ones there. That's what we're worried about. But now, as you see, this is the issue with the government shutdown. All of the housing data, building permits, housing starts, new home sales, pending homes, existing, these are the really important ones. They're all, except for mortgage rates, which we'll go over, they haven't been updated since October, November. And like I said, here's pending home sales. You could see as it's all declining. So I think as this next 2-3 months updates, this could show a really big slowdown with a lot of this stuff happening right now. So again, though, comparing this all back to the 2014 level. So let's now even look at and let's look at the home builders, and we could talk even about if the market is going to go up and what would make the market go up. I don't know if we could call it really the forecast, but it's what could change the initial forecast. But here too, I want to show you guys the home builders, because now at the same time, for you stock traders and for me, I'm looking into this because now if you start to see real estate data go down more, one, you have to find the opportunity as a real estate investor. I'm taking full advantage of it. There's people are getting more motivated than ever. You could be smart about that. But now in the stock market, if this data starts to break what most people in real estate have forecasted, and numbers do start declining below a growth level of 2014-13, then you might see these stocks drop a lot. But now, if this data has been held up by the government shutdown, I think some of this home building data could crush some of these home building stocks because they've all bounced, which I was surprised. Here's, XHB, and then there's home construction, and then the home builders ETF. But both of them are up. They all literally both trailed a SPY. But you could see at one point, the home builders, when the real estate data was dropping, they started to die. So I think really we kind of have the data that's going to kill it. If people are extrapolating it, unless they could fudge that data, you might see an effect. But the fact that these stocks are doing good is an interesting play. Now, let me play devil's advocate, because this is also in the same grand perspective of what we're discussing with the real estate market, and that is looking here to 2015, 2016. So there's, let's say this is home construction. Maybe we'll do home builders as a better example, the ETF. But this is 2016. Man, that's so crazy. We have to go to like 5 years. But 2015, right? You see at the low right now when they started selling off, and even from September, that was when real estate started to really drop off, and the market was lagging too. You could see that through here. The market really, really lagged and then finally caught up. Real estate was one of those big things to slip, but there's also many other factors, right? But now it hit a low. This was a 2015 low, a 2014 low. If you go look at a lot of the real estate data where people are expecting the total number of new sales, existing, all that, it looks like these charts where it's, you see the numbers have dropped substantially, but it's usually at a metric of 2015, 2014, you know, a little lower. And we could go through some of the other data, or you could go do that on your own as well too. You guys trading economics, you know, go to indicators, countries, and this page is always in consumer and then housing if you want to find that. But, you know, seeing where the stocks are, they could be bouncing because maybe they hit too big of a low, but it's already at these 2015, 2016 levels. But what I'm saying is if the data comes out officially and it gets lower than that, that could be interesting. We'll see what happens. So I'm going to watch out for that. I'm going to look at these home builders, but to give you an idea, this is the main stuff, the latest thing, and this is how we could even tell now. This is what I'm kind of worried about. January might be a good month. For real estate, this is the mortgage applications. I said I was going to make a video I think I might do it for you guys to read it, but essentially mortgage applications reports every like 2 weeks, I believe, or every week. And so what the whole aspect of it is that it's telling you 1 or 2 weeks over week, so you could kind of tell it as velocity. So this is up 23% from a down of 8%. The week before that was down 5%. So it's interesting they're still having this data, but if this number starts to increase, maybe January's good. But then again, I think November, December data for real estate could be bad. That could drop real estate stocks. That could drop the overall market. We'll see. But in general now, the key issue here for real estate in general, if this data persists and starts to get lower than these 2014 levels, it is going to change investors' mindset and I think homeowners' mindsets a lot. And now the other next factor is rates, because rates have been ripping. They've been going up tremendously, even though we may have seen them drop short term. I think that's going to, you know, hint at a rising dollar, and rates are going to also maybe shoot back up. But at the same time, mortgage rates are a lot higher. And this is now the issue we talked about with what made real estate so high was the lack of supply or the lack of inventory that was occurring over 2016, you know, really since 2014. But now the issue is, even with this unique situation we have with, even if the market's going down, and this is why people are even saying stagflation, and maybe I think it could hold up real estate prices if the stock market goes down. It's the fact of rates, that now rates are so much higher. Like I remember I have mortgage rates on some of my properties at like 3.5%, 3.8, and I thought those were high at the time. Now people are getting 6% right now. It's substantially higher. So the issue that people are having, it's like, well, do I sell my home? Prices have come down a little bit, but now mortgage rates have gone up a lot. Or people don't want to sell their house because they've got such a low interest rate, and vice versa. So how that's going to come into play with price and everything else, that could either hold the market or hurt the market. So that's the next level with everything globally and all that. But we could watch what happens globally. I'm watching, you know, how stuff develop in China and overseas, because I've talked about it in my other real estate videos. I think the biggest thing is foreign demand and FDI, foreign direct investment. And I think the trade war, we're seeing that, you know, this is balance of trade, capital account, stuff like that. So I think that is what's killing the real estate market. I'm seeing my Chinese people, my Chinese buyers and foreign investors that we know, they're still buying, but not as much. And then also people are moving. It's just a different type of investment now. You know, commercial is, I think, one of the main ones, but also mainly fixed income. I think that's the number one thing. So that's pretty much it. But I'll leave it there. Hopefully you guys enjoyed this. I love you all. Subscribe. If you want more real estate, give me, you know, who's in real estate. I actually want to know. Give me the questions from the agents, the brokers, who wants to get into it. Let me know what we could discuss on this. But I'm bringing this up because it's gotten quiet, and I'm saying don't underestimate this, because again, you see how I'm bringing this up. This is recent data and it's new. It has a market implication, and it has implications to make money. We can make money on this through playing, you know, physically in the market of real estate, investing, and then even on stocks. So keep your ears peeled, your eyes to the street, your ears to the street, whatever. But okay, subscribe, see you on the stream. Should have another video. We're gonna have an option video, and I know, so even for you real estate guys, you agents, you're gonna need to learn how to invest soon when the market crashes and plays off. But I know a lot of you want to get into it too. It's cool, and we need lenders. We need to build our real estate team. So yeah, I love you guys. Peace out.